Real estate is going crazy. So what's happening in the real estate market in 2021? Should you buy? Should you sell? Should you wait? Should you stay? Or should I go now? Well, let's look at what the data is telling us. It's March 2021 and we are ready to talk about everything happening in the housing market. Let's start with where we sit right now coming out of the last year. Hi, I am darling.medranda, a realtor with eXp Realty in the beautiful Long Island, New York. I post new videos every Monday and Tuesday and you don't want to miss anything. I will share this screen here. It's a quote from NAR that really kind of summarizes 2020 with the final numbers coming out. Existing home sales total was 5.64 million in 2020, up from 5.6% in 2019 and the most since before the Great Recession. Now, what's the story here? The 2020 market is really setting up the 2021 market. A lot of things that we are going to talk about in just a minute. Where a listing is going to come from, all of those things are going to begin to come into play in the real estate market. But if we continue this journey about what the experts are saying right now, we have the most up-to-date home price forecast. And you can see this one right here, covering really a scale of anything from NAR down to CoreLogic. And everywhere between the average of these 7 forecasts is about 5%. Remember, historically in this country, home price appreciation has been about 3.8%. Seeing that above the historical appreciation number, what does that mean? Well, price will always be the factor of supply and demand. We have talked about that extensively. And even if we look at what CoreLogic just said about the 2020 market, is that home prices increased at 9.2%. Quite a hefty increase due to what? Limited supply and more people saying we need a home. And also, as you look at this home price forecast right now, we can say, okay, there is going to be more supply coming into the market and there is going to certainly be more demand. And these experts know that, and they're saying we are going to see a healthy appreciation in this real estate market. Interest rates are something certainly that all of us are wondering about and talking about. This is the latest look of the projection from Freddie Mac on the 30-year fix. And as we have talked about before, the orange there shows where we have been, blue showing where we are going. And what's the difference this time? Well, it used to be flat. We are going to stay in this flat environment. And we are starting to see that revise up. And I will expect, as we go through the year, maybe seeing it revise up even more as the economy starts to improve. But the reality right now is that we are forecasting, and by looking at experts, that are going to be in a good rate environment in 2021. Certainly in the low threes, whether that is 3.2% or 3.5% or whatever forecasters say throughout the year. Mark Fleming said this, and I thought it was very, very interesting. He said, rising interest rates reduce house buying power and affordability. We know that. But there is a key. Low interest rate is a sign of a strong economy, which increases home buyer demand. By any historic standard, today's mortgage rates remain historically low and will continue to boost housing buying and the power and keep purchase demand robust. It's natural to think we are starting to rise in rates and can expect that in the coming months. And we might say, we are going to sell less homes than that. But historically speaking, a rising rate environment is signaling a better and improving economy. The gift of a recession or the gift of an economy slowdown is that we see the Fed is working and the federal government working to help lower home loan rates by the levers they have to help spur the economy forward. That's what they're doing. They know the economy will not recover until housing recovers, and we are the beneficiaries of that. If we look at what the experts are saying, this is the latest rate projects going all the way through the first quarter of 2022. And you can see there is a range there. 3.1 on the low side, 3.55 on the high side, but all together showing this environment that I believe is going to be very, very good rate environment. We are in a situation right now, historically low inventory in this country, and we need more listings. We need more people to put their homes for sale. Could be one of the things that certainly holds back the market and probably has held the market relative to the number of people that want to purchase a home. Just simply can't because they can't find one, or somebody doesn't put their home on the market because they don't know where they're going to. So what are experts saying right now? More inventory is going to come back to market as people feel more comfortable. Does that mean it's not going to happen on the front end of the year? Expert says that some people will feel comfortable listing on the front half of the year. probably more in the second half of the year. And then even going into the spring of next year, we will see even more feel comfortable for that. So that's where those numbers come from. Forecasters are saying we are going to sell 5% more homes this year than we did the prior year, and the last year we sold more houses than the year before. But let's look at real quick at what they see right now. This is a look at month supply of inventory going all the way back to September 2019, a little over a year there, and as of December, 1.9 months of active inventory across the country. Now, to put this into perspective, last December, we had 3.6 months of inventory across the country. Even then, we were back in a market that was inventory deprived. We had an inventory challenge, and even more of an inventory challenge we were seeing today due to all of the things that we know happened on 2020. And really, what I don't want to miss here about 2020 is 2020 redefined home for a lot of people. Certainly, low interest rates drove demand. There's no doubt about that. But a lot of people said we need something different in a home. The needs that we have for our families, for us individually, whatever the case might be, have changed. And now we need to go out and we need to downsize, we need to move up, we need to do whatever we need to do for the needs that we have. And no doubt we are seeing low inventory in the market because of that. There's also experts in the industry that agree. Homes are being sold as quickly as they come to the market. Really, the health of the market is going to depend on how quickly homes come into the market. Maybe not this resting inventory number. So something we will want to watch and pay attention to. Now, what are the things that are going to influence people to put their homes on the market? We talk about people are going to feel comfortable. The next piece is working from home. This is a very interesting study that came out from NAR's Real Estate Forecast Summit. 2019, about 6% of the population working from home. 2020, that shoots up to 21%. 2021, we were estimating about 18% of people working from home. And 2022, suddenly into about 12%. What do I take away from that? The difference between 2019 and 2022, about double the number of people working from home. There are people that this year will get clarity on what that means for them. They might mean in some cases, I don't have to go back to the office. I don't think that's what everybody's going to be doing. In some cases, I only need to be in a day or two a week, or some hybrid type of schedule. At that point, maybe I don't have to leave where I used to live. And there is a lot of places in this country that people will make the same type of decisions. Or they move altogether to a different area because they don't have to be where they were before. The other area that is going to bring more inventory into the market is building. Joel Kent, here from MBA, says, new home sales activity, both mortgage applications and home sales, ran at a pace considerably ahead of 2019. Showing the ongoing strong growth in housing demand and new residential construction. So we ended this year at builder optimism, builder confidence at a high. We ended the year at starts at high, permits at high. That inventory is coming. I think there is another place I always want to stay on top of for you, is the forbearance question. It's a big question about what's going on with these people that are coming out of forbearance. I think we still need to talk about this. There are still people that are going to come off of forbearance that are going to need to do something. If you haven't visited my YouTube channel, I have a forbearance video over there that I will suggest you watch it. I will put it over here so you can take a look at it. Will forbearance bring a rise in foreclosure? Sure it will. We don't see a crisis. We have been very, very vocal about that from a data perspective, and still don't see a crisis. But will we see a rise in foreclosures? Yes, we will. We have talked a lot about equity in homes. I want to bring this quote from Lawrence John because I think there is still a question about equity in this. Given the huge price gains recently, I don't think many homes will have to go into foreclosure. I think homes will be just sold and there will be cash left over from the sale or even in a distressed situation. So that's a bit of a silver lining in that we don't expect a massive sale of distressed properties. We know equity is strong today and it's giving people options. Options they didn't have back in the housing crisis. Very, very different. In the housing crisis, folks were underwater. They literally owed more on the home than it was worth, and they walked. We are in a very, very different situation today. The next topic I want to talk about for just a minute is affordability in today's market. because we talk about interest rates in the front end, affordability, very much driving the demand side of everything that we do. People going, if we are going to do something, now is the time. Now is the time that we need to go out there and do it, because we can afford what we couldn't maybe a year or two ago. We always use NARS, Housing Affordability Index. This index, the higher it is, the more affordable a home is. And where do we sit today? We sit at 168.2, the blue bar here in the Housing Affordability Index. We always reference the years when the distressed properties dominated the market and is extreme affordability. People think, well, homes are not as affordable as they were 10 years ago. Well, there's an element of truth to that, absolutely. But let's not miss the fact that they are more affordable today than they were in the last couple of years in the housing crisis, and way more affordable than 2008 and prior. Let's also remember that there is a lot of difference between housing affordability and affordable housing, two different things. And I know there's some areas where there's no affordable housing, and that's true. That's a different issue than overall housing affordability in this country. Thank you so much for watching. If you like this video, be sure to hit the thumbs up, leave a comment below, and be sure to subscribe. I post a video every Tuesday and Thursday every week about real estate tips. Also, if you are thinking on buying or selling, I have put a link below in the description for a free home and buyer guide. Thank you so much, and I will see you next time.